Hey everyone, you got Patrick McLain here, your host for this Reimagine, where we are, as you know, bringing together students and industry experts. Today we're lucky to have Anthony Scaramucci. Before we get started, I'll go ahead and let the students briefly introduce themselves. Anish, you want to start us off?
Yeah, for sure. Thanks so much, Patrick, for having me here. Anthony, nice to meet you and talk. My name is Anish, and I'm a junior at UT Austin. I'm also the managing director of the TxB Blockchain Incubator, which is part of the blockchain club here at UT Austin. We're really focused on building and adding to the overall ecosystem. So part of my role is really focusing on helping these startups go from just an idea to actually launching and creating real world impact. Today I'd love to pick Anthony's brain, figure out how Skybridge Capital is adding to the overall crypto ecosystem and creating something net new.
Thanks, Anish. Francesca, how are you doing?
Hey, what's going on? Hello, Anthony. I've been following you for a bit ever since Bull Run. My name is Francesca. I often go by Franny. I am half Italian. My mom immigrated here. I'm currently a senior at VCU, Virginia Commonwealth University, based in Richmond, Virginia. I'm majoring in fintech, financial technology. Yes, it is a major. I've been around. My niche is really into blockchain tech, its utility. I'm the president of VCU Blockchain. We've been around for only 2 years, just really focusing on how we can provide the most value back to students and our locals, since we are in a city. So really pulling together people from the engineering department, business department, arts department, since we do happen to have one of the top art schools, and really seeing what utility, what value we can provide back to students, and giving utility to blockchain technology, cryptocurrencies and such. So again, thank you for having me here.
Yeah, happy to. Last but not least, Abdullah, you want to introduce yourself and your what you guys got going on in your school?
Yes, of course. Hey everybody, great to meet you, Anthony. Glad to be on here. My name is Abdullah. I am a student at the Ross School of Business at the University of Michigan. I'm here representing BAM, Blockchain at Michigan. We're a club that's probably 4 to 5 years old, completely student-led and student-founded. As a brief overview, we have our club divided into 3 different sectors: our education sector, our consulting sector. So we work directly with companies on certain projects, whether it's testnet like development projects or business projects. And then our third division is what I currently lead, is our governance division. We have around $30 million worth of tokens, delegations that we have received for Uniswap, Aave, and Compound from a number of protocols and VCs, and we're actively work with different stakeholders in the community to propel certain proposals, to vote on certain proposals, and direct the direction of some of these protocols. And Anthony, I know you guys delved into opportunity zones from your side as well. We currently work. I currently work at an investment firm in Ann Arbor, Arana Ventures. It's a blockchain investment firm, and our sponsor is Jackson Dearborn Partners. So they invest a lot in like commercial real estate and a lot of opportunity zones. So there's some interesting synchronicity there. So yeah, that's a little bit about me. Happy to be here, guys.
Well, it's nice to meet all of you guys. I appreciate it. And go ahead, Patrick.
No, you want to give the audience just a brief introduction on yourself, and then I'll go ahead and kick us off.
Okay, yeah, so I'm Anthony Scaramucci, the founder and managing partner of Skybridge Capital, which is an 18-year-old investment manager based here in New York. My 30-second background is I'm originally from Long Island. I went to Tufts, Harvard Law School. I worked at Goldman Sachs for 7 years, built a registered investment advisor that I sold. The company I sold to ended up selling itself to Lehman Brothers. I left in 2005 to start Skybridge. And about 3 short years ago, I pivoted some of our assets into the digital space. And so we probably have, I don't know, about $500 or $600 million in the blockchain cryptocurrency assets.
Thank you for that. So let's go ahead and get started here. One thing I was just talking to the students about before you joined, though, we had a few minutes, was really thinking about, even we've been involved with the university program, and I was joking back in 2017, we would try to fund some university blockchain clubs, and they would get a letter from the school like, we can't be involved with this drug coin, right? Like it was still hangover from like the Silk Road. And I'm starting to get a little worried now for a lot, there may be 150 universities that'll be watching this feed. I'm starting to get a little worried now, the after effects of, some of the stuff we've just seen with FTX and government regulation cracking in, and kind of what the perception is. In early 2021, like I even had a chance to like sit down with SBF for like 3.5 hours, like of the show we made. You were actually part of it, called Coins. And ever since then, I kind of followed his trajectory. And even how I got to know him was from some friends I had who were like, some of the biggest traders on FTX. I feel like, to me, there was a crescendo around April when there was that event in the Bahamas. I know you got to kind of see a little bit of that kind of front row. I felt like there was that April event, and then we had Luna, and then we had the rest of this shortly after. And like what I heard about what happened in the Bahamas was that it was just kind of like a party in the back end. Like starting there, like did you start to get your first signs about the FTX team like in that April event that something might be wrong with them?
Well, the short answer to that is no, because I sold a piece of my business to Sam in September. So if I had gotten any inkling that I thought there was something significantly wrong with him or FTX in April, I obviously would have never sold a piece of my business to these guys. Just to provide a little bit more context and backdrop. So I have been in the conference business since 2009. We have a conference called SALT. I'm actually going tonight to Abu Dhabi, where we're hosting an event at the Yas Island Hilton Hotel called SALT Investopia. We do the conference now in Singapore. We'll be back in New York in May with the original SALT conference, sort of North American concept. But in September of 2021, I had met Sam back in June of 21. He asked to sponsor that conference. And so we did a conference coming out of COVID at the Javits Center in New York. FTX was one of the principal sponsors. I got to know Sam at that conference, and that's what led to that Bahama event, because we ended up having a 4-conference sponsorship from FTX. It was a 3-year deal, and we promised them that we would do an event in their jurisdiction. He had his office in the Bahamas. I'm very good friends with the owner of the Rosewood Hotel in the Baha Mar complex there. And so we orchestrated and curated that event for Sam. When you say that it was a party, there's no question there was a party going on. I feel like a good conference has 3 things to it. Number one, you're inviting interesting people that can meet and learn from each other. Number two, those interesting people could potentially do business with each other. New friendships or relationships are established. And then number three, if you're not having fun at a conference, then what the hell is the sense of going to a conference? And so we hired Steve Aoki, the very famous DJ, to come down. He did an event for us. We had Orlando Bloom there. Katy Perry was there as well. It was a very high profile event. Sam struck me as a brilliant nerd. I would be interested to hear your reaction from the Coins show. But he struck me also as somebody that played the part of being unaffected by wealth. And so his $40 million apartment was sort of explained because of the security needs that he may have needed as a high-profile billionaire. But he was driving around in a Toyota Corolla. He certainly didn't have the affect of somebody that was into wealth. There was no jewelry, watches, nice clothing, no yachts or anything like that. And I had gotten to meet his parents, who, particularly his father, was a Stanford University tax professor, both parents tenured at Stanford Law School. And Kevin O'Leary and I had done a charity event for them that was curated by Sam's 83-year-old aunt. And so I got it wrong. I thought Sam was a brilliant, a little bit quirky, but a brilliant genius. And I thought that he was going to be the Mark Zuckerberg of crypto, where he was going to innovate and create this brand new exchange that was going to be quite transformative. But it turned out that Sam was the Bernie Madoff of crypto, and there was a certain malevolence to his personality, and which is evidenced by the testimony that he was about to give to the Congress. If you read that testimony, there's some very painful things in there about his personality, his admission to his depression, and some of the things that he's been working on his whole life. And it was a sad situation. Now that, look, it doesn't give him license to do what he did. What he did was atrocious, and he'll likely go to jail for several decades. But I did not see it in the Bahamas. Otherwise I would have never gone into business with him. So now he owns 30% of Skybridge, or the bankruptcy estate, the entity that has now declared bankruptcy, owns a piece of Skybridge, and we're working with them and the lawyers involved to buy that piece back, which I think we'll be successful at doing, and we'll move on. But I mean, it is, to me, it's one of the sadder stories of what's going on. But I want to make one last comment and then take other questions. I think one of the problems we have in our society, though, is we have a lot of revisionist history. I have people telling me they knew Sam was a fraud. And I said, oh, you did? They said, yes, I knew Sam was a fraud. And I said, oh, did you have an account at FTX? Oh, yes, I had an account at FTX. Well, if you had an account at FTX, that contradicts what you're saying, that you knew Sam was a fraud. So stop saying that. So we're going to have a lot of people that revise history. They're going to tell you that they knew he was a fraud when they didn't. We're going to have a lot of people telling you how smart they were not being involved with him. But in the meantime, everybody wanted to be involved with him because he was the second largest cryptocurrency exchange. He was the darling of the Washington establishment. He was about to get margin approval. And what I've learned from this experience is that we have a tendency to blame victims. I have journalists coming up to me and saying, I must be an idiot for being involved with Sam. And I say, okay, well, perhaps I am, but there were 25 of the highest profile venture capitalists. There were several billionaires that gave him money. He's the one that gave me the money. And so there's a big distinction there as well. But we're here now. It's a very sordid, very sad thing. And since there's a lot of young people listening, we get status anxiety and social anxiety in our lives. We want to be the best or the richest, or we want to move faster than our peer group. I would tell everybody here, take it easy, take a chill pill, focus on doing the right thing, and great things are going to happen to you in your life. And if you have integrity, there'll always be opportunity. And so despite my ups and downs in my career, I've always had massive amounts of opportunity because I'm a straight up person.
No, and I appreciate that. And I think, like, even how I can give my perspective, like I mentioned earlier, like some of my partners were the biggest traders on FTX. So I'm hearing about this kid even when I get a chance to sit down 3 hours early in 2021, when I feel like not many people even knew who he was, right? And what am I hearing? Oh, this is going to be the richest person on planet Earth, right? Go down the list. And I think when I was hearing about that Bahamas zone, which I knew you guys through like a stand-up event, right? Where I almost feel like FTX team was kind of dragging you guys into that because, like, I don't know, it was like everyone in crypto, every crypto trader, maybe not the institutional guys, was talking about it like it was like some Illuminati thing, right? Like you were either there at that and you weren't. And I think shortly after that, I just feel like things really started to kind of blow up in the market. I'm going to cap off my point there around like you guys' relationship a bit, just because like I'm genuinely curious from what I've just read. Do you mind elaborating a bit on the trip that you guys took to Saudi and apparently what he was saying about, sounds like CZ?
Yeah, no, I'm happy to do that. I've talked about this before. After we entered into our relationship where he bought a piece of my business, we were working with him to help build his relationships. And I thought his vision, and here's the great tragedy of all this, his vision for building a next generation exchange, which wasn't just an exchange related to crypto, but it would have been a tokenization of stocks and bonds, the eventual tokenization of art and perhaps real estate, and just literally transforming the way we transacted. That was his vision. And I thought it was a very compelling vision. And obviously 25 of the best venture capitalists, sovereign wealth funds, billionaires felt the same way because they had funded FTX with over $1 billion of capital. And we were out there to raise him more capital. He was going to raise another round of financing. Now, what we didn't know at the time is that he was filling a hole from the debacle that was taking place. And you mentioned it. So after the Crypto Bahamas conference, we saw the end of Three Arrows, the hedge fund. We saw the unwinding of the Terra Luna project. You had the Celsius debacle, and there was a really big crypto crash, if you will. Sam made it out that he was inoculated from that he had good risk management and he had avoided that tumble. But what in fact had happened was he tumbled down alongside of everybody else, and he was taking client money to cover up the mistakes that he had made. And so he was looking to raise capital. He positioned it as being very different. So I want to apply the context here because I think it's very important. So now he's purchased a piece of my company. We're traveling in the Middle East to raise him an additional $1 billion. I am introducing him to friends of mine where I have 30 plus year relationships. So these are people that are, I have relationships with longer than Sam Bankman-Fried has been on the planet, or longer than these students that we're talking to. And, I stuck my neck out for him. So I took him to see the Crown Prince, MBS. I flew with him to the UAE to meet MBZ, the ruling leader of the United Arab Emirates. And, Sam is a very bright, very smart man. And he came across well, and he came across as a very articulate person in those meetings. But what we did not know is he was creating this nefarious activity under the surface. His flaw, though, was youthful arrogance, because he was sitting there among his many flaws. I mean, obviously the indiscretions being his biggest, but his youthful arrogance, he was in the room criticizing his competitor, CZ, who is the founder and CEO of Binance, which is the largest cryptocurrency exchange. And you guys may know this, but CZ helped Sam get his business started. He was the seed capital for that business, and he still owned a lot of that business. And yet Sam was in the Middle East, where CZ now lives, and he was criticizing CZ. And I think that the word got back to CZ, because it's a small community, the Middle Eastern community, and he got upset. And so maybe 5 or 6 days after that meeting, he sold or pushed into the marketplace $500 million of Sam's token, the FTT token. And Sam wasn't able to handle that. He didn't have the capital or the wherewithal. And so the house of cards that was FTX collapsed as a result of that. Now, I've had the opportunity to talk to CZ subsequent to this debacle, and I believe CZ. CZ suggested to me that he wasn't trying to put Sam out of business, but what he was in fact doing was brushing him back, so to speak, or letting him know that he didn't like the negative commentary that he was saying about him. But Sam was a house of cards, and so the whole thing collapsed. And so this is weird of me saying this to all of you students, but I'm grateful for that. I'm actually grateful for CZ, because God forbid these relationships that I have so much trust in, and God forbid that these relationships that mean so much to me had put money with Sam. That would have been a nightmare for me, and I would have been very distressed about that. And so I'm just letting you guys know that sometimes there's a silver lining in everything. I'm glad that we took that trip to the Middle East. I'm glad that Sam said what he said. I'm glad that CZ knocked him out of business, because that would have been a really worse situation to have people that I have these 3-decade plus relationships with give them money. That would have been a disaster.
Definitely. No, it's a very Buddhist way of looking at it. And definitely there's a silver lining to everything, and we just have to look for it. And yeah, I think it's probably for the best. Definitely sounds like it. So thanks for that. Francesca, do you want to kick us off?
Yeah, just shifting the conversation more towards digital assets. Thinking long term, what role do you personally think Bitcoin will play within the US economy, and how are you positioning Skybridge to reflect your views regarding Bitcoin? I know there's tons of cryptocurrencies we can look at, but I personally prefer to look at Bitcoin. So I'm curious to see your opinions on this and how Skybridge is involved.
So, it's a really good question, and I have been so wrong. And I've been so humbled by this market, Francesca, that you probably should either do the opposite of about what I'm about to say, or take what I'm saying with a grain of salt. I would say this to you, that this technology, in my opinion, is transformative. And you guys are young and your brains are fresh, and I'm sure that you wouldn't be part of your digital currency associations or governance associations if you didn't believe what I'm saying. It is a unbelievably robust way to delayer the economy. And so whether it's me with you, Francesca, or me with Abdullah or Anish, we could transact between ourselves permissionless without the third party, the proverbial third party. And if you think about that for a second, you think about the magnitude of that. My God, what an amazing thing that would be if we could do that together. And so what I tell people is this is going to work. This is a better product. And this is something that I believe will transform the world. Now, when something is better than what's out there, you get resistance. There were people that said this horseless carriage is a fad. I have a horse and I have a carriage, and this is way better than a horseless carriage. This is a fad. Bill Gates himself, he said that the internet was a fad. I remember him saying it. I'm old enough to remember it. Now, he's a brilliant guy. And of course, he realized that he was wrong on that. So he adapted and pivoted and plowed money into the internet. Some people say to me, well, Bitcoin's 14 years old and it has no real commercial applicability. And then I look at them and I remind them and say, well, in 1903, the Wright brothers figured out how to fly an airplane. 14 years later was 1917. We did have aircraft. We had biplanes flying around and so on and so forth. But many people in 1917, 14 years after the invention of the aircraft, said there would be no commercial applicability for the airlines or for the aircraft. Okay, and they got that wrong. And so I think people are focusing more now. 2021, with the upturn in Bitcoin and sort of that bull cycle for cryptocurrencies in general, a lot of media exposure, a lot of time on the television networks, the business television networks, and then we had a crash. We then had a lot of different things happening at once. We had fraud and we had over leverage in the system. And so you get the combination of those two things. You get a lot of negativity in the press, and you get a lot of regulators saying, okay, this is really bad and we need to protect the average investor. And so we're going to do things to stall or to slow down the process. So with all of that, the fact that Bitcoin is still 24-ish thousand, or let's call it 23,000 today, somewhere in that neighborhood, is a sign that this is a pretty sturdy technology. And many of these layer one protocols, I think, will be successful. That's not to say that the 12,000 coins out there will be successful. I mean, many of those will likely go to zero, but I think it would be foolish of us to take the short-termism that's happening in the marketplace today and extrapolate that negatively. So I'm willing to bet 5 years from today, things like Bitcoin will be, 3, 4, 5 times more valuable. Now, one last point, and I'll take another question. We've just gone through the greatest, most aggressive interest rate hike since the inception of the Federal Reserve. You go back and look, we jacked rates from 0 to 5%, and we did it in about 17 or 18 months. That is unheralded jacking of interest rate hikes, if you will. And that's coming to an end. And what it does, there'll be a very big pivot back into these assets. That's my opinion.
Definitely.
Right,
Anish,
these are good questions. I feel like I'm in the hot seat. You guys are a lot friendlier, though, than the White House press corps. I'll give you that. And you're probably a little less drunk than the White House press corps, too. So that makes it a lot of fun.
Anish, you try to live up to that. You want to take us?
Yeah, for sure. Absolutely. Definitely this question leads off of what Franny just asked, but obviously back in the late 90s, I obviously wasn't around for that time, but from what I've read, underneath the Clinton administration, the regulation that they put on the internet kind of set up the future for why the US became such a hotbed for such activity with Silicon Valley and all the innovation that happened. Looking at that same situation now with crypto, it seems like the US is almost fumbling the ball. And the regulation is not up to par, and it's not catching up to the innovation that's happening in the industry. And we're now seeing, places like the EU, Dubai, Singapore, creating these robust, legal frameworks for crypto companies to operate. We're seeing such an exodus of, talent and innovation leaving the US. How does the US put themselves back in the driver's seat and what is necessary for regulators to do in order to promote the crypto industry within the U.S. And what do you see Skybridge Capital playing a role in that?
So it's a really good question. And so I don't have a great answer to that question because obviously I'm an American, and perhaps this is American centric. I love the United States, and I feel that the United States has had the mantle of financial services leadership for 120 plus years. And I think the innovation that the United States came up with the Securities Exchange Commission 90 or so years ago was a great innovation, regulatory innovation, because it made people feel safer. The introduction of the FDIC, all the things that were put in place in the United States after the Great Depression actually helped people get more comfortable, and they helped create a free-flowing capital markets. And I think, unfortunately, now the pendulum has swung so far that in the United States, we are becoming way more restrictive. If you think about the original charter, the charter was, we want free-flowing capital, but we want mom and pop investors, retail investors, institutional investors protected. We don't mind what they invest in. They can invest in anything that they want, as long as the people that they're investing with are completely transparent and they delineate all the risks associated with the investment. That by and large has worked. But I think where we are right now is, what is cryptocurrency? Is it a commodity? Is it a security? How should it be regulated? I think the problem that we're having is because we have inertia in the political class, and we have people that don't like taking risks in politics or leading. We have no direction or guidance from the U.S. Congress. There's no legislation that's demarcating how the Congress feels about these assets, if you will. And so we are regulating through enforcement. We have the, I don't want to be overly critical, but we have the Securities Exchange now making a decision to regulate arbitrarily and capriciously. So we're going to have a Bitcoin futures ETF, but the Grayscale Bitcoin Trust cannot convert into a cash ETF, even though there's really no difference between the two of them. And it would unlock $7 billion of value because the trust is trading at a discount. The SEC will not allow it. And so now we have to force it into the court system. And I predict that the Grayscale guys will probably win the case. And if they don't, it'll go to the Supreme Court. Why are we doing that? We should have clear demarcation and clear legislation. And so my final thought on this is, what I would encourage everybody to think about is, what is going on that works in the industry and what is going on that doesn't work in the industry. And people should have that conversation with their congressmen and women, because the way to get this done is the way they did it in the 1930s. They went to the banking community and they went to the securities community and said, okay, how do we stop the shenanigans? And how do we prop up the good actors in the industry? And then write the rules so that the rules are very clear, and good men and women who want this industry to grow and they want this industry to be a leader for the United States will follow those rules. But I'm pessimistic right now, Anish, because we don't have the leadership in Washington to do what I'm recommending.
No, and I think we're just, to your point, I think we're a few years away. I think we saw in the last election cycle, but I think there's going to be politicians where this starts to become, a core part of their pitch. And I think if we go out another few years where there's American citizens are missing out on $5,000 airdrops simply because they have the wrong passport, right? Like this might become an election issue. But Abdullah, you want to take us to the next question?
For sure. My question is surrounding more so fund management. So Anthony, you've worked across a multitude of different sort of assets. You've worked in equities, bonds, some real estate, and now you've pivoted towards crypto. And this is a completely different asset class, an asset class that is warranting things like, okay, the SEC has to reestablish some of their rules, perhaps, and has to relook at how we test it's directed, things like that. And so from your perspective, what are some of the differentiating factors from a fund manager standpoint that you look at while investing in coins and tokens as opposed to different assets, right? Whether it's like a token, we have something that's a lot more liquid. You're differentiating between like a safe and a SAFT. So there's so many other considerations. What are some of the more paramount ones that you consider before investing in something?
Yeah, these are really good questions. And so again, what I would say to you is that we do a ton of research. And I start with the premise that I'm going to get a lot wrong. I have been humbled by life. I have been humbled by markets. We just got done talking about Sam Bankman-Fried. I got that wrong. I thought Sam was a brilliant young man. I thought he was going to build a next generation exchange. And I got it wrong. I didn't see the nefarious nature to his personality or frankly, the malevolence. I just got it wrong. And so I have a number of investments in the space. I think you have to view this space as so nascent, so new, that you have to make the judgment, rightly or wrongly, that many things are going to fail in the space. But if you get certain things right, they could go 10, 20, 30 to 1. As an example, I have a very large investment in Solana. Solana is a layer 1 protocol. I know Anatoly well. I think they built a terrific mousetrap, and it is one of the faster protocols. Now, it's had some downtime and it's had some fits and starts related to that, but that's primarily related to the robust volume that's on the platform. And so he's ahead of everybody, and he's built a great community, and I think he could be one of the winners. Now, I could have that completely wrong. I have a big position in something called Algorand, another layer 1, different way that they sort of verify the transactions on the database, but also I think a brilliant protocol and could end up becoming one of the leading protocols. They've had some fits and starts in terms of the way their community has grown. I could have that wrong. But my point is that we're doing the research, we're meeting the technologists, we're meeting the cryptographers, we're analyzing the TPS, we're analyzing the TVL, the transaction per second, the total value on the chain, to determine whether or not we're going to be right about something. But, listen, we're going to be wrong about a lot of things, but I'm hoping that 1 or 2 tokens that are in my portfolio actually become the industry standard. I may have, your parents would understand this more than you, but there used to be video recorders, VCRs, and there used to be things called the Betamax. And Sony had something called the Betamax, and for whatever reason, it didn't catch on, but the VCR actually did. And, it was the same thing with Blu-ray. There were other competing technologies, but the Blu-ray disc became the industry standard. And so one of these
the Betamax made their tapes proprietary, where VHS made it an open standard. Sony tried to own the tape thing and lock it down.
Right. Okay, so there you go. Okay, so Patrick knows his history about this stuff better than I do, and so that should tell you something. An open sourced system is probably going to work better than a closed source system. There may be an AI token that's being developed right now as we speak that may leapfrog everything. I don't know. What I do know is that I used to log on to the internet in 1998, and we used things like Alta Vista and Lycos and America Online. We had all these portals that got us into the internet. And then along came Google, and Google ate everybody's lunch, and it has been the market leader for the last 20 years. Now we have something called ChatGPT that Microsoft has made a big investment in. Maybe that will change the way we view Bing, the Microsoft search engine. I don't know. What I do know is that this is an evolving market, and things change very, very quickly, and we're going to get a lot of things wrong, but I do believe in the long-term promise and the long-term potential of the technology. And so if I'm spread out enough and I have a diversified group of holdings, hopefully 1 or 2 of those things will work very, very well.
Francesca, you want to take the next question? sure you probably use ChatGPT to help write it.
No, I didn't actually, but I've definitely used it for many other things. So oftentimes, as a student immersed in this space, it's a very volatile and fast-paced space, right, to be in. So given that you are spread between managing digital assets, hedge fund offerings, and all of the SALT conferences, what are the little things you employ within your daily routine that keep you motivated and on top of things? I'm personally asking also for myself and all these other students, as they probably have a bunch of other things going on top of the fact that they're managing their blockchain clubs.
Very good. Another good question. So I guess what I would say, I think I've been so humbled by everything. I mean, the reason why I'm hesitating is because I don't have the best answer. I just have an observation that I'll make. Okay.
Mm-hmm.
What I will say to you is when I started in the business, we didn't have email. Okay. So that's how old I am. Okay. I'm 59 years old. So I'm old enough to be your parents. Okay. And maybe one or two of your grandparents. So try not to laugh. But here's what I would say to you. When I logged into the internet in 1996, I had a dial-up modem. Okay. And I think Patrick probably remembers those. It was like whirring and burring underneath my desk. And then it took 35 to 50 seconds for my AOL landing page to arrive. And then I could log on and buy a Pez gun from eBay and maybe a book from Amazon. And I could look at my emails. And I thought, okay, this is pretty cool. And there was wildly attractive valuations to all this. And everybody was super excited about all this. But then there were a lot of naysayers that, well, what's the practicality of all that? Well, just imagine if a time traveler came to visit me from 2023, 27 years later, and said, well, you know what? You're going to be on a Zoom call with students. It's going to be like George Jetson talking over the voice and television set. And you know what? You're going to see billions of people streaming 4K video from their Netflix, Amazon Prime, Paramount Plus, whatever the streaming account is. Oh, and you know what? There'll be trillions of dollars of transactions that take place on the internet. It won't just be Amazon, but it'll be tons of different places that are buying and selling goods and services. And so you're asking such a good question, and I'm trying to answer it observationally about the past because I cannot predict the future. But what I can tell you is going to happen is there's going to be this huge exponential explosion in the future. There could be AI on your computer. There could be embedded AI software in your phones. I don't know. If you listen to Elon Musk, he's developing something called Neuralink, where there may be even an embed in your brain, where you'll all of a sudden you'll have total recall on every piece of knowledge that there is in a society. So when you think about all these different things that are happening, and you think about the way we're now crowdsourcing and crowd developing things, it's impossible to predict where all this stuff is going, but I am wildly bullish and wildly optimistic about it. But another really good question.
It might take 23. It might have taken 23 years for the Zoom call to connect over that dial-up internet too.
Right, you remember that? Yeah, I would have been coming into
Yeah.
you like a Godzilla movie. The voice would have been 10 seconds ahead of the motion.
Everything AOL I remember is they were just sending CDs all over the world every week. You'd have like a box of CDs in your mailbox. They're just sending CD-ROMs to every address.
But, listen, Steve Case, even today, he's a brilliant guy, brilliant marketer. You know what I mean?
Not every company lasts, and we're seeing that in crypto, probably on an accelerated scale. Anish, you wanna kick off the next one?
Yeah, for sure. Anthony, I actually lead accelerator here at UT. So I work with startups, every day. I'm seeing all these new use cases, seeing all these people come up with some crazy ideas. I'm like, man, there's so many applications for this crypto technology. In your eyes, you mentioned that, crypto allows for peer-to-peer permissionless, transfer of value. I think that's probably been the number one use case for, blockchain technology thus far. But what are some, emerging use cases that you're taking a look at and you're kind of watching from afar and kind of passionate about?
Okay. so I'm not an investor, but I am looking at the crowdsourcing of AI. Okay, now you guys may have heard of the helium token or not the helium token, but what you can do is you can buy a device from Helium and you can build like a cellular protocol, if you will, alongside of your friends that own these devices. And you can have this sort of crowdsourced cellular activity and you can earn helium tokens while you're doing this. I believe that there will be crowdsourcing of AI. I believe that there will be software that can get embedded on your computer. And as the chips get stronger and faster, there'll be AI skills, if you will, that can be crowdsourced. And I believe that there will be tokens that will pay you to plug your computer into that sort of global network. And so that's something I'm looking at, and that's something that I will likely be investing in.
You have maybe a follow-up on that, Anish, if you want.
Yeah, I mean, we've seen like OpenAI, right? They recently became closed source. So what are your thoughts on like them being closed source? And do you think something like AI should be democratized for everybody?
So this is the debate, and this is the interesting thing. And Patrick brought this up because he's a good student of technological history. So Betamax closed sourced, okay? You know, Citibank invented the ATM machine and they invented the ATM card and they closed sourced it, right? And, you know, there you go, right? And so, you know, one really was successful, the other was less successful. You know, Apple didn't sell the operating system software to everybody. They held it. They ended up with a 3% market share. Microsoft was selling it to everybody. They ended up with a 97% market share. Now, Apple started to catch up once they developed the iPhone and the iPod and all the different things that they did. But there you go. So open and closed source. I think closed sourcing long term is a mistake. It always works in the short term. It's protective. It creates a moat around the business. If the business is ahead of the other businesses and they close source it, well, people will be driven into that business. But if it's competing against something that's open source, the open source stuff will probably win, because what happens with open sourcing is you get more and more people involved, and it creates exponential advancement and exponential progress. So if you're asking me a question about the democratization of AI, in some ways that will happen, in other ways it won't happen. There'll be some AI that is closed-ended, and there'll be some AI that's open-ended. I don't think you'll have just blanketed democratization of AI, but there'll be a tremendous amount of AI that you can access. And I think it's a fascinating thing. I just, you know, listen, you know, Elon Musk points out that the AI, you know, we got to be careful too, because if you create, you're ways away from creating something sentient or something that has consciousness. But if you get there, okay, we have to make sure that there's checks and balances in place to protect people from that, because, you know, we know human beings are frail and make mistakes with their conscience, and perhaps AI will do the same thing.
Well, that's the funny thing about OpenAI is Elon Musk is the first check there, right? Their charter was to democratize AI and keep it open. And then they put out ChatGPT, caught on, went viral. Next thing you know, they sell the whole thing to Microsoft. So it's actually quite an interesting story, even what happens when people try to go in with those intentions. But hey, Abdullah, you want to
people like making money, right? We both know that. So that was the most effective way to make money off it, and so that's what they did.
Yeah, no, 100%. But yeah, we'll see if we can keep an organization. You know, it almost feels like we need a public utility around AI. Abdullah, you want to take us in here?
Sure. From a fund's perspective, timing is very important, and reading the times, reading the trends, and assessing narratives is absolutely vital. So from your perspective, if we divide narratives and trends up into two parts, let's say short term, let's say 2 2 years, 3 years, and then long term, say 5, 8, 10 years. What sorts of applications do you see being prominent in the short term? Something perhaps, say in the like DeFi perps or account abstraction. And then in the long term, maybe taking house deeds and putting them as NFTs and involving incumbent systems and putting them on chain. What are some of the narratives that you're seeing short term and long term at the moment?
Yeah, all of that I'm seeing, and I'm also seeing a friend of mine is working on a project that he calls watercolor, which I think is a fascinating name because the water is liquid, right? And the color is art. And he's coming up with a way, he's working with a few big insurance companies to tokenize art. And so you'll have a masterpiece that you can literally buy a percentage of through these, tokens, if you will. They're effectively NFTs that are backed by a hard asset. And it's a fractionalization of the hard asset, but it's digitally fingerprinted. So you own an original. And he is going to start trading those. That will create liquidity in that market. And as you know, when you create liquidity in a market, you get more capital formation. And so, not to bore you guys, but years and years ago, when you wanted to have a mortgage, you went to your local bank and you met with the banker and they made a decision whether you were credit worthy and they gave you money to buy your house. And that mortgage sat on the balance sheet of that local bank. Well, about 45 years ago, a guy named Lou Ranieri said, well, we shouldn't do that. Let's fractionalize this. Let's sell those mortgages in a very large pool. So it's not just Anthony's house or Francesca's house. It'll be everybody's house. There'll be thousands of them together. And we'll get some big institution to buy that stream of houses and the cash flow associated with it. And so that was called a mortgage-backed security. And so weirdly, they're going to do the same thing now with illiquid assets. They'll be able to do that in the art world. They'll be able to do that in hard asset real estate, maybe a collectible like a baseball card. I believe all of that's coming. And as that comes, that greater liquidity will create more investment opportunity and it'll create more capital formation and capital flow. These are really good questions, guys. I'm very impressed.
We've been enjoying these student talks. They know what they're talking about. But hey,
I got just time out. I got to drink more coffee, so I make sure I'm on my game. I got to make sure there's more caffeine in the system here.
No, you're doing great. But hey, I'll go and ask the last question here, and I know we're bumping up on time, and want to respect it. For the students watching, Anthony, I think the ones who are interested maybe in a career in blockchain, are maybe a little frightened on some of the market, cycles they're seeing and the extremes, and maybe their mom's calling them and saying, "Hey, are you working on that Bitcoin thing? My friends are at lunch were asking me about it, right?" How would you tell them to think about this space as I think about maybe a career?
Well, what I would tell mom is that this is a very early space and that she should watch 1883, which is on Paramount Plus or available on Amazon Prime, because this is the Oregon Trail. This is covered wagons heading west to find freedom and to find opportunity. And so there will be dangers. There will be hooligans. There'll be people that'll try to steal the furniture out of your covered wagon or steal your treasure as you're heading west to create this new, wonderfully prosperous world. And so we're in a new frontier. And so what I would tell mom is that there's going to be a lot of ups and downs and there'll be a lot of uncertainty. But the people that are willing to stay in it, and I think this is the one lesson I would leave for all the young people listening, perhaps the only hallmark of my career is my persistence. I have had ups and downs. We just talked about this disaster with Sam Bankman-Fried, and I stay in it. I get up every morning and go to work enthusiastically, and I love my job. And so what I would tell mom is that I'm doing something that I love, and so therefore stay with me despite the ups and downs, because I intend to stay with it despite the ups and downs. But we're in a volatile new business, and so you have to expect that.
Definitely. No, and I, as someone who's been in it now for a little over 6 years full time, like I can't tell everyone watching like how many times I've seen the price of Bitcoin drop to 3,000, 4,000 overnight, right? And you're just in it for the price at X or Y, right? It probably is a little dangerous. So definitely find things you like about it. Find things you like building. Find things you like will be here. You think in 100 years. But hey, appreciate everyone watching. For all the students, great questions. Hopefully you enjoyed the talk. Anthony, we know you're busy and definitely appreciate you making the time. I hope everyone enjoyed it.
Hey, listen, it's great to be on with you guys. I appreciate it. Thank you.
Thank you, Anthony.
Everyone watching, tune in and we'll be on the next talk here after this. Have a great day.